Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. So recent price action within the recent week actually doesn't bring a lot of clarity on the near standing perspective on the gold, but still we have some moments that we could use to get early signal on where the market is continuing downward action, or we get the first signs the market is ready to start rally immediately. But first, I just would like to say a few words on the current fundamental situation that we have in the gold. In today's weekly report, we're trying to take the fresh look on this and trying to analyze what actually Fed is done and how it may impact on the gold. So in two words speaking, the major driving factors are still valid, guys, for the gold, because Fed policy, although they have not provided the new liquidity measures, they not have announced the new increasing of the existed bond purchasing program and keep it at the 120 billions per month. At the same time, they intend to continue hold rates, and that makes impact on the real rates, as we estimated last week. Two major driving factors: providing the new liquidity measures, and second is keeping interest rates, especially real interest rate, the difference between the nominal yield, nominal interest rates and inflation, as low as possible. Currently, as the long-term inflation expectations are rising, it means that inflation are rising. And the difference between the real rates that is held by the Fed is nearer to turn negative, and that is supportive factor for the gold that suggests that gold could continue upward action. At the same time, the lack of the new liquidity measures could reduce the pace of the market. This is not negative sign, but well, market could make the decision faster if the liquidity measures will be announced. But we think that this is the temporal moment. We are coming to the elections, guys, in the United States. October, the last month before elections, and as the Democrats, as the Republicans, need to get some loyalty from the electorate, and they need to make people happy to get their loyalty. And that's why, as Democrats and Republicans, needs these new supportive measures to the unemployment people. And I think that in October this will be something should be announced, and that problem will be resolved. Whether it means that overall future of the gold market is absolutely cloudless. Well, I wouldn't say so, because currently the markets start to make bets on the changing situation and faster recovery. So as you know, the Fed already have announced that recovery is going faster, almost 2 times faster than it was suggested initially. But investors who are, well, accept more risk and are ready to put the bets on that using some option strategies, they start to put the positions on the faster rate increasing on the long-term yields. For example, here is the put-call ratio on the ETF and TLT that make investments in the long-term bonds, treasury bonds, and you can see since August the bets are rising. So investors put the bets on the faster rates acceleration. It's already trying to get the profit from that, anticipating of the faster. The major background for this is actually suggesting that vaccine should be provided sooner rather than later, and new liquidity measures will come. So they hope that the Fed will keep the rate low, but on the short part of the yield curve until the 10-year yields, while second part of the curve, long-term part of the curve, will start rising, and they're trying to get the profit on that. So that is the source of the risk for the gold market. But it is based on two assumptions: vaccine and liquidity. If something will go wrong with that, and currently, as you can see, we already seen in the headlines that the second lockdown could happen. So Israel is already in a lockdown. And cases are increasing in the United Kingdom, in Europe, Spain in particular, even in Germany, Russia. Well, across the Europe, this number of cases are rising, and some lockdown, maybe not as hard as it was, maybe shorter, maybe not as strict, but it really could happen. And everything will go wrong with that. I mean, the vaccine and some liquidity measures or something, these positions could be unwind, and that will support the gold market. But this is the source of the risk. So if you would like more details, not to know more details about that, you could read the report. But in general, overall situation stands moderately positive. So the question is practical now. What we could do in the current circumstances, what to keep an eye on. Unfortunately, guys, daily and weekly chart doesn't clarify overall situation, because as market stands on the pin and consolidation, it keeps door open for both scenarios. For the upward scenario, we have the potential butterfly on the weekly chart that has the target around 2160, 2170. If the rally will start immediately, this market will go there. Bearish scenario suggests some drop, some deeper retracement before upward action. But as volatility has dropped significantly, you can see that daily average sold level right now stands at 1890 almost. And it coincides with the weekly average sold as well. So currently we will have no choice but have to exclude this confidence support from our view, and OP target that initially we considered, this ABCD pattern. Now it's not interesting for us anymore. It means that currently the only scenario that we suggest with the possible downward action is based on the 1985, 1890 target that we discussed in the last week as well. It's interesting that even completion of the bearish scenario doesn't totally exclude the bullish scenario as well, because the market will stop here and these lows will be valid. That will keep potential butterfly valid as well. So both scenarios will be completed. Now the question whether the market will complete the scenario or not. On the 4-hour time frame chart, I remind you the picture that we discussed last week, because two different targets stands here. The daily COP also stands around this level, and that's the scenario that could follow. The market could provide us great level for taking the long position. Now the major question: whether the scenario will be realized or not, and what particular patterns and moments we have to keep an eye on to understand early where market is going. Well, for that purpose, we need to recall our head and shoulders pattern that we discussed on Friday. On Friday, market was at this moment, and we said keep an eye on the 1960. If you would like to go short, that will be a good point for taking the short position. Probably market could move slightly high because we have here the steep ABC bottom pattern. And indeed, once market has completed the OP around 1960, market starts dropping. So if you already have short position, that's great investment. So you could move stops to the break even and see what will happen. So the head and shoulder stands in the center of our trading process on the next week. Because if it will work, we consider mostly XOP target, because it stands very close to those targets on the follow time frame chart. And if market indeed will go lower, that's probably hardly it will stop right at the OP 1920. It probably will proceed to the XOP to complete major targets. That's in the case of the bearish scenario. Conversely, the failure of the hand shoulders, for example, market will stop here, turning back up again, turning back to this top, will tell us that probably gold intends to start upward rally immediately. Because in this case, failure of this pattern suggests rally above the top, moving above the top. Well, it's probably will be breakout of the triangle as well, and this could be really this early sign of starting rally. At least it's just no taking no short positions. So that's what we intend to keep an eye on the next week. So head and shoulders stands in the center. Those already have shorts, keep them and just see what will happen. If you would like to go long, you have to wait for either 1880 target. It should be completed here. It's also daily COP, 1883, or you have to wait for the failure for the hand shorts. Once it will be broken, and so it will be a sign that you could try and take the long position. You could, for example, use the stop buy order at the moment of the breakout of the head. That's also could work. So that's approximately what we intend to do on the next week.